the people in your neighborhood. In your neighborhood.
Your mortgage guy, Brian, here. I am back with episode 3 of These Are the People in Your Neighborhood. Today in the studio, I have none other than from Ari David Insurance, the Ari David. He is your go-to personal lines carrier, the principal advisor for Ari David Insurance, servicing not only just the Arlington Heights area, but the northwest suburbs as well. Ari, welcome to the studio.
Brian, thank you so much for having me. What a warm welcome. I'm excited to be here and just talk about some of the more pressing and modern insurance topics that the average consumer is facing today.
Wonderful. We're so happy to have you because I think insurance is a really important idea for especially first-time homeowners to understand, right? For a lot of them, this is going to be the largest financial decision they've made, and they want to make sure that they are properly covered. God forbid something were to happen, and we're going to get into those different types of things that can happen, but God forbid something happens, you want to make sure that, you're covered. And who better than to explain it than Ari David himself?
Brian, again, thank you so much for the confidence there, and I couldn't agree more with you. I think that oftentimes there's so much that goes into purchasing a home and the closing process that unfortunately insurance is a aspect that can oftentimes be sometimes rushed or overlooked, and it's the safety net that is protecting one of the most precious asset that you've invested in. And to Brian's point, one of the bigger purchases of your life. Definitely something that you want to make sure there are no gaps or holes in, and that's definitely an area that I love to educate folks on and just make sure that they are properly protected. And I think what people often forget also is that in the insurance world, one size doesn't fit all, and your needs may vary from your neighbors or your cousin, another family member, whatever the case may be. Everybody has a little bit of a different situation, and there are avenues to properly protect what you personally need and also make sure that you're not adding on anything additional that maybe you don't. So,
yeah, I think that's you hit a nail on the head when you said it's not one size fits all. Everybody's coverage is different. I know, the Jake from State Farms will tell you hey, this is how it's done and this is the one way to do it. But I think that's something that you're going to talk to us about today and really get into is how to customize the insurance and how to figure out what the best kind of coverage, whether it be on your home, your car, et cetera, is going to be for you and why it's important to ask these questions. So let's just get right into it. The market in home buying, the market in general, right, is crazy right now and has changed a lot over the last 24 months. So in your industry, in the property and casualty, in the personal lines industry, what are some of the biggest challenges that you're seeing in the insurance market today?
I think that the insurance market is facing very similar challenges that most anybody is in the market to some degree, but the foundation of it starts with the cost of goods, right? The cost of everything related to construction equipment, so lumber, steel, AKA things that go into a home, glass. All of those commodities have seen significant increases in the last 12 to 24 months. And the same holds true for automobiles. Those hard commodities typically, oftentimes may be coming from overseas, but nonetheless, when those commodities see significant increases, insurance unfortunately does follow on the main basis that what is our job as the insurance agent and or carriers is to properly protect you to the point where, God forbid, something happens, you're restored properly, exactly rebuilding you stone by stone or brick by brick. And that's our goal, as agents, is to make sure, God forbid, whatever does happen, we keep you properly protected across the board. So
then as a consumer, what should I be thinking about? Like how then, if costs are starting to rise, if like you said, commodities, lumber, steel, et cetera, are starting to rise, what as a consumer can I do then to protect myself?
The honest answer is just not letting things slip through the cracks or understanding what you're actually purchasing from an insurance policy, right? I think, and we were going to dive into this a little bit in another question, Brian, but I can touch on it a little bit here. One of the more common misconceptions that I tend to see from first-time home buyers and even folks who are buying, a newer, more expensive car for the first time, from an insurance carrier's perspective, we are looking at what it's going to cost us to, God forbid, rebuild your home brick by brick or stone by stone, right? And the reason I bring this up is, you can purchase a 3-bedroom, 2-bath home in the heart of the city of Chicago for an astronomical price, or obviously a more significant price. Why? Because real estate stems from location. That same home may run for a much different, price tag in a more rural area in a different state for obvious reasons, right? So while you may pay $500,000 for your home in the heart of Chicago, that same home may be half the cost in a different location, and your policy may have $300,000 in coverage, even though you paid XYZ dollar amount for the home. But at the end of the day, a cost of a stone or a brick at Home Depot is going to cost the same regardless of where you place it. And I hope I didn't stray too far there, Brian, but I wanted to kind of break into, part of the reason why we want to keep an eye on those costs and make sure that we do have enough coverage for you. God forbid something does happen.
No, I think then that actually brought up a question to me. So what you're saying is, even though the house in Chicago might cost more than the house maybe in the western suburbs or central Illinois, the exact same house in Chicago and the house in central Illinois, should they have the same coverage, or should the house that costs more have more coverage?
Honestly, their dwelling coverage, which is what the home is insured for replacement costs or replacement value, as many insurance carriers will refer it to. The dwelling coverage should be rather similar, Brian. Yes, to your point. Again, on that same basis that, God forbid, whether the home burns down in Chicago or a rural area of Illinois, a stone at XYZ, retailer, Lowe's or Home Depot, it costs the same, right? Where it doesn't matter, it just matters where you're putting it. So the land has not changed in the event of a loss. The cost to rebuild and reconstruct is the coverage that the insurance carriers are looking at. And to your point, yes, coverages should be the same. But there are other coverages in a policy that may need to be increased based on somebody's personal situation. If they need higher liability coverages, depending on their net worth or the value of assets that they have. So the question, to answer your question, the policies may be similar in certain coverages, but different in others. And that kind of leads back to what we talked about in terms of not one size fits all, and everybody's situation is a little bit different. So there may be similarities, but maybe some additions or upgrades that we want to make depending on the situation.
And so as a first-time home buyer, and I'm getting a little ahead of myself, I think, right here, but as a first-time home buyer, if I'm coming to you and saying, hey, Ari, I'm getting ready to buy a home for the first time, you go out and you don't just go to State Farm, you don't just go to Allstate. Why is it that you offer, or what is it that you offer that makes you different than just going to my State Farm office down the street?
Brian, that's a great question, and I'm really glad that you bring it up. First and foremost, I wanted to just provide a little bit of background on myself. I actually worked for State Farm insurance companies for many years. Despite my youthful appearance, I always joke that that's how I lost all my hair at State Farm. No, I'm just kidding. State Farm is a phenomenal insurance company and one of the most reputable household names in the insurance industry.
Please note we are not sponsored by State Farm.
But they operate on what we call in the insurance world a captive agent model, in which that if you are a State Farm representative or agent in representing their products, you only represent their insurance products and no other companies on the market. I am what's called an independent agent, where I am licensed by the state and authorized by multiple insurance carriers to provide and sell their insurance products. Some of the carriers that I represent, for example, include Travelers, Safeco Liberty Mutual Company, Nationwide, Progressive, and many other credible carriers in the insurance market that are open to having licensed agents like myself provide their products. And to your point, Brian, because of that, I'm able to just provide more options and customizations in that same regard, right? To our earlier discussion, one size doesn't fit all, and perhaps carrier A is best for John, but carrier B is best for Sarah, to give example, right? Everybody's situation is a little bit different, and carriers have what we call in the industry their own appetite or preference. Some carriers are simply just stronger in certain geographical areas or zip codes. Some carriers prefer to insure individuals in the heart of the city. Some of them prefer to insure individuals in more rural areas where it's less populated and less likely for something to go wrong or for a loss to occur. That's the beauty of working with an agent like myself, where you will have multiple options, and hopefully we can identify the best fit for you personally and your insurance needs. That's the goal.
So here's one for you. Buying a house, you go, the client comes to you and says, hey, Ari, I'm buying a house. Can you get me a couple options? You've got your Liberty Mutual, you've got your Safeco, you've got your Allstate, you've got all these different options. How do you help a client if two of your carriers come back with very similar coverages, very similar premiums? What are you talking to your clients about when it comes to, hey, these are pretty much the same offer? How do you decide?
A great question, Brian. I think, that's a tough answer, but also an honest one in saying that some carriers provide an even stronger incentive to do what we call bundle everything together, right? So that could be a deciding factor where one carrier just becomes a little bit more, I wouldn't say competitive, but I will do my best as an agent to align all of your policies with the same insurance carrier and bundle them all together if I can. Reason being for that is just that it makes things a little bit simpler for you and for the carrier that's doing what they can to protect you. The carriers actually would prefer to insure your home, your cars, jewelry, umbrella, whatever assets you may have, ideally, because doing so allows them to have everything under one roof and just keep a full, bird's eye view of all of your assets and make sure that you are properly protected. It's kind of a win-win for everybody. But if coverages are very similar or there isn't many differences, I'll always ask my insured what they feel they may be best comfortable with and provide my honest advice. Of course, pricing and various coverage factors come into play. There are certain nuances to every policy, but at the end of the day, we try to just kind of bring everything together and ideally bundle together just to keep you properly protected under one roof.
So just clarifying, you want to insure things as like even jewelry? Like I should be going out there and the engagement ring, the wedding ring, like those are things that I should be insuring? Of
course. That's a great point, Brian. I'm glad you brought this up. Another common misconception is that all of your valuables are covered by your renter's or home insurance policy. You do have personal property coverage, but oftentimes most insurance carriers have exclusions for certain categories or segments of personal property. Or they cap it at certain limits. For example, jewelry, fine arts, memorabilia, fine china, if you will, artwork, you name it. Certain cameras is another very common one, for example. Those categories of personal property typically have set limits. And if you do have a very expensive engagement ring or something of very high value that's very important to you, there are separate policies that insurance carriers offer that can fully protect that for replacement value at typically a very affordable cost. Every carrier sometimes has a different name for it, if you will. So oftentimes you'll see it called a personal articles policy or personal articles floater that's built into your homeowner's insurance policy. There are different avenues to accomplish that, but that policy certainly exists, and I highly recommend it actually. If you do have high valuables, whether it be diamond jewelry, watches, or artwork, just because God forbid something happens, you've invested a good amount of money into that, and keeping it properly protected at replacement value is never a bad idea.
So that's something I never would have thought of. Like as a first-time home buyer, I'm never going into the conversation and being like, I've got my 1987 rookie card deck that, somebody's going to fact check me on this, that let's say like Tom Glavine was a rookie in that year and that's worth a ton of money now. I never would think to be like, hey, Ari, can we get that insured? I would just figure it'd be covered.
And unfortunately, Ryan, I think your methodology and logic is very common. I don't expect and I hope I don't offend anyone in saying this, but I think the whole reason that I exist as a insurance advisor and why I give myself, or I have that title, I should say, is I realize that people aren't going to spend their nights reading a full insurance contract or a full insurance policy and understand every single piece that's into it. And that's why I'm here, to just kind of help you kind of decipher what all of it means, put it into plain English and say, hey, if I were you, this is what I would do, and here's why. Because these are the assets that you have, and God forbid something happens, I want you to know what your options are and at least properly protect them as you see fit. If you're comfortable not insuring your Rolex watch for $10,000 and you're not worried about losing it or somebody stealing it, hey, no problem. But at least you know that it exists, and there are avenues to keep that fully protected and insured if you want. That's another thing that I always strive for, is just being able to give people options and educate them on what's out there.
I mean, I'll admit I sit at home at night and read the rules and terms of
Doesn't
the
surprise
conditions.
me.
And
it makes so much sense now, Brian. It makes everything's adding up now.
Oh, there we go. All right. So speaking of things first-time home buyers don't really think of, what are challenges that first-time home buyers are going to face when thinking about things like personal lines of insurance today?
I think, a lot of the challenges that I see with first-time home buyers and, insurance in general is just like they've never had to deal with insurance of that nature before, right? Sometimes they don't even know where to start. And the honest truth is there's so much that goes into buying a home between, working with a realtor or a great mortgage lender, or broker, whatever the case may be, and going through closing and working with a title company. I mean, the list goes on, and it can be overwhelming. I totally get it. I can certainly see how insurance is something that, isn't necessarily top of mind, but honestly, probably one of the more important pieces of the puzzle. To your initial question, Brian, some of the things that I see first-time home buyers face challenges with insurance related is, understanding how their escrow account works, for example. They never had to deal with an escrow account or, what all that mumbo jumbo means. I mean, I hate to phrase it that way, but it can come off confusing to somebody who's never done it. Other things are, things that you want to keep in mind or be prepared for in terms of closing costs, getting a home inspection in place, or at least, strongly recommended, right? There are certain, hurdles that you want to cross at every base. And again, insurance is just one piece of that very big puzzle. So I understand that oftentimes as I'm working with first-time home buyers that it can be very overwhelming, and I just do my best to, make the insurance piece of it as seamless and painless as possible, while also being able to educate them on why I'm providing this type of coverage or certain policy, and any other options or variables that I would strongly suggest that they add on as necessary based on their situation, and also make sure that they're not, getting policies or other options that have a variety of additional coverages or additional costs on them that they may not need, right? That's something that people forget about, is that there are certain coverages that maybe you don't need to spend the extra costs on.
The rust proofing, right?
Yeah, the appliances full upgrade or whatever the case, right? There's a variety of stuff that you can get out nowadays on these home warranty companies, and that's a whole different ballgame I won't jump into. So
okay, yeah, we're not going to we're not going to talk about home warranties today,
yeah.
But at what point in the process would it be smart for a first-time home buyer to reach out to you? Are they reaching out right away before they even start looking for homes, or is it like when do they call Ari David?
Again, great question, Brian. And I hate to answer it this way, but I will be honest in saying, in a perfect world, I would love for you to reach out to me or your agent of choice, ideally 30 to 60 days before you are closing on the home. And again, if you're not sure when the closing date is going to be, or you haven't even picked out a home yet, even just a quick call to say, hey, Ari, we're thinking about buying a house in this general area, and we'll definitely be giving you a call as we get closer, or as we have a more solidified idea of the location and get closer to closing, et cetera. In a perfect world, 30 to 60 days, right? But on the flip side, and the honest answer that I think, is just worth noting, I've had to help people, a week, 2 weeks before closing, right at the last minute. And I hate to even throw that out there, but things do happen. There are instances where people just forget that they didn't get the insurance done, and it needs to get done for whatever, there are certain requirements. For example, a lot of times they've gotten a policy in place, they think they're good to go, and they didn't realize that there were certain requirements by their lender that they need to uphold, or certain coverages that they need to have in place that are not part of their current policy and therefore no longer valid, and they need to get a new policy in place ASAP before closing.
So would you say that it's important that the relationship between the lender and the insurance agent is established pretty quickly after you go under contract?
Crucial, 100%, Brian. And again, every lender is different as well. There is no cookie cutter insurance requirements, if you will. Again, every lender has certain requirements that come into play, and to be honest, most of them are similar, yes. But there may be nuances to each mortgage contract, if you will, and just being aware of having the proper coverages ahead of time so that you're not scrambling last minute and needing to get something in place that may cost you more just out of necessity, right, to get through closing, of course. But I think the most common hurdle that I tend to see is that folks sometimes are very focused on price or premium cost, and they may be getting quotes that are at a lower cost due to coverages not being as high as they should be or not hitting their mortgage lender's requirements, and then they've purchased the policy at the lower cost, if you will, but it's actually not in compliance, if you will, with the lender's underwriting department or whatever requirements they may have, and then they need to scramble, last minute. Again, I hate to phrase it that way, but it is something that does happen, and never want to see that. So
yeah. So here's the one tip, the tip for the day, and Ari is going to give his seal of approval on this. When you go under contract, one of the first things you need to do is get that insurance quote to your lender. Do not wait and say, I'll get it to you eventually. I'll get it to you in a week. I'll get it to you in a month. Get it to them right away so that the underwriter can review the policy and make sure it has the correct coverage. You don't need to decide on one right then and there, right? You don't need to bind yourself to a coverage 30 days out, correct?
Absolutely correct, Brian. You can always make modifications or adjustments as well, but even just having a general, quote ready to go and locked and loaded to kind of close things up as necessary a week, 2 weeks from closing, et cetera, is never a bad idea, 100%.
All right, good. So now we've got the coverage. We bought the home. What are some of the challenges that you see first-time home buyers, or even not even first-time home buyers, just home buyers in general, when they go under contract, purchase the home? What are some of the biggest issues that homeowners run into in that first 2 years of owning?
I would say, and again, I'll even preface before I answer in saying my goal is not to scare anyone, right? But I will I will just give the most realistic occurrences that I've seen, more often than not. And it can happen in the first 12 months of homeownership. It can happen in the first 24 months, 2 years, 3 years, whatever the case. So I'd say for first-time home buyers in your first few years of ownership, these are common occurrences or instances of loss that you just want to keep in mind. And it also plays a part as you're purchasing the home, right? So here in the Midwest in Illinois, we all know that Mother Nature can be mean to us sometimes, right? What do we get a lot of? Hail, golf ball sized at times. And
lately, yeah. I mean, like 2 weeks ago, I think I saw one the size of a basketball.
You're preaching to the choir, Ryan. Man, my phones start ringing and it's like bomb. No, I'm just joking. But Mother Nature can be harsh on us, and we will get a lot of hail here in the Midwest. We also get a lot of thunderstorms, right? A lot of heavy rains. So I'll start there in saying that one of the more common or frequent instances that I'll see is when hail hits, people have a thought in their head that they have crazy roof damage and their roofing claims coming into play. A lot of times there is truth to it, and you do have roofing damage. And again, very important to, when you're buying a home, ask the previous owner when's the last time they replaced the roof. Roof average age is probably nowadays, especially here in the Midwest where they can take a beating, anywhere from 25, to 40 years if you're lucky. Usually, sometimes a little bit less, to be honest. And
that's any kind of roof, or is that your slanted traditional?
Traditional in our market here in the Midwest, we will typically use what's called composition 3-tab shingles or architectural shingles, also known as asphalt fiberglass, are probably your more common. Also, I think 3-tab composition, very common. Those types of shingles are very similar in material. But just different types of pattern designs depending on the type of roof you have. If it's a gable roof, which is like a standard roof that you would picture like a triangle.
I'm over here doing it too. I'm doing this type of roof.
Yes. They think I'm crazy doing a little dance here, but I would say roof is something that you definitely want to keep in mind as a first-time home buyer. Just a question to ask, and most people that you're buying a home from are going to know, or a general idea. And a lot of times it may be public information as well. But beyond roofing and hail claims, my second point there, we get a lot of thunderstorms, a lot of nasty rainfall, right? And what a lot of people, again, a very common misconception for first-time home buyers that I want to point out, at least here in Illinois, I should say, or in the general Midwest, the majority of you are not in what's called a flood zone. It is very, very rare to be in what's called a flood zone in this general area and be required to have flood insurance. Trust me, if you need to have actual flood insurance, you should know. Somebody will tell you early
I will
on.
tell you.
Yeah.
I will tell you if you
Yeah.
have to have flood insurance.
Thank you, Brian.
Otherwise, so if I don't need it, should I get it?
No. I mean, the general answer is no. And the reasoning is, again, I'm just trying to be as transparent as possible. I'm not, the answer of everything here. But in the Midwest, historically, we are, if you look at the map, why do we call ourselves the Midwest? We're kind of in the middle, right? We're not in Florida, if you will. And I want to say a small prayer for every insurance agent in Florida right now. No, I'm half kidding, but some truth to it. They deal with a lot of natural disasters, if you will.
Yeah.
We're not next to a massive body of water where flooding is very common or going to be a strong likelihood that a tsunami is going to hit Illinois. But where I was going with that is, well, what is common in here in the Midwest and in Illinois is your basement filling up with water. And people think, oh, my basement's flooded. I need flood insurance, or this could happen to me. 99% of the time, you're not in a flood zone, and what you do need is what's called a water backup and a sump pump endorsement. Every carrier may have a different, verbiage or coverage name for it, if you will, but it's typically called water backup or sewer backup coverage. And really what that means is when we get heavy rainfall here in the Midwest, you have typically in your home, if you have a lower level or a basement, even if it's not finished, and a lot of you may have beautiful basements that are finished with lots of great things down there, furniture, etc. You have what's called a sump pump. And your sump pump is obviously designed to pump water away from your home when we have heavy rainfalls to prevent your basement filling up. However, sump pump systems are not 100% foolproof, right? And when the power goes out, if the sump pump's not working properly or it malfunctions or the backup generator doesn't work and the sump pump fails, all that water coming down that's supposed to be being pumped away from your home, which is typically mixed with sewage. It is sewage water, unfortunately, which is why it's very unpleasant. It inevitably has nowhere else to go, and your basement does fill up with water in that event. And that's where that special endorsement and coverage comes into play. It is not on a standard homeowner's policy. A lot of people, unfortunately, don't know that or are unaware that it's not fully covered off the bat, but you can add it. And that's where, stopping by an advisor like myself can add some great value to just know what you may need and what you don't. If you don't have a basement or there's no other lower level and that really isn't necessarily a factor for you, you may not need it. But that coverage can also come into play in condos, for example.
I was about to say, if I go, I'm on the third floor of a condo, I don't need sump pump backup.
Not necessarily. Again, you still have sewer lines running through your home, right? Because you have plumbing in your unit, right? So there is still a chance that those sewer lines, back up, or the plumbing backs up to some degree, right? Those lines kind of coincide. And what people forget is, like, insurance comes down to the cause of the loss. How did the loss happen? Was it due to the fact that rain came down and your sump pump failed? Or was it due to the fact that somebody, put something down a drain that they shouldn't, right? Those are things that, insurance companies investigate, and then they try to determine liability. Was it the neighbor's fault upstairs or down below, et cetera? I don't want to go crazy and open up that full can of worms, but that's really what insurance comes down to is, how did it happen? What's the cause of the loss, and who is responsible or liable for incurred damages?
And at the least, regardless of who's responsible, if you don't have the coverage, none of that ultimately matters. So it is important, and you mentioned this, there are coverages, there are policies out there that you're going to get shown that maybe don't have that included, and you just get sold on the low premium. You need to make sure that you're talking to a personal lines advisor, to an Ari David, having that conversation. What am I actually covered for? They just see the big number, dwelling coverage, $1 million. I'm good. I've got it covered, but it's having that conversation with a trusted advisor that can make sure you're properly covered.
I couldn't agree more, Brian. And, again, I think it also, on that similar note, goes both ways, right? You may not actually need that coverage. You may need a different type of coverage. You may have certain valuables that, you want to properly protect that you didn't even know you could get a separate endorsement for at, an extra whopping $100 a year, right? A lot of folks also assume that it's incredibly expensive to throw on an additional endorsement or add the coverage that they really need, when in reality, it's typically minuscule in the grand scheme of things, especially when you're talking about properly protecting one of your biggest investments being your home and having that safety net around it, right? It's probably the last thing that you want to skimp out on, I guess. I hate to use
for
that
an
word.
extra $5 a month.
Yeah, exactly.
Do you want to make sure your finished basement where you've got your entertainment system is properly covered for the $5 a month, $60 a year? It probably is something to look into. So I know you've got clients blowing you up today because it is buying season right now. So I don't want to keep you too long, but what I want to do is give you the floor. What's the biggest piece of advice that you would like to pass along to a first-time home buyer as they get ready to make their purchase?
First thing first, Brian, I just want to say again, thanks so much for having me today. It's been a lot of fun to be able to just go kind of dive deep a little bit into what the common home buyer may encounter. But
and just a side note, we're gonna have you back because I got like questions upon questions that I still want to ask you. So don't worry, this is not the last time you're here.
I'm looking forward to it, my man. But to your question here, and what I would leave you with if you're a first-time home buyer listening in our cast today. You just want a good team behind you. I know that may sound cheesy, but the home buying process can actually be rather overwhelming. And the honest truth is you're going to spend a good amount of money any way you look at it, right? That's part about buying a home and home ownership and getting excited about it. But that's what you've saved for. That's what you've worked so hard for up to this point, right? So my best advice is get a good team behind you. Get a good realtor who really cares about you and your goals and getting you in that dream home, because he or she is going to be a huge asset for you. They are going to go above and beyond, and they do this all day, every day. These types of negotiations, putting in offers, dealing in situations where you have multiple offers, and you're trying to do what you can to find yourself in the dream home that you've always wanted. And on a similar note, when you talk about having a good team behind you, get a good mortgage lender, broker, whoever you like to work with, whoever you may know in your network. Of course, I got my mortgage guy, Brian, right here next to me, and he's always my go-to for anything mortgage related. And my favorite part about Brian, too, by the way, is just he's very good at explaining all of this stuff and putting it into English, because I sure as heck don't know everything about mortgages. I'm the insurance guy, so that's where Brian comes in, and I can lean on his expertise. But yes, having a good team behind you, great lender who really cares about, again, what your goals are and what's in your budget and what you really want to accomplish with the purchase long term. Because you got to remember, buying a home is an asset. You're building equity into your home, and not every lender is the same in that regard. Not every lender is, there are some folks. I mean, I'm not trying to. I shouldn't phrase it this way, but talk to people, get second opinions. Figure out what your goals are and how establishing the right team ahead of time with your lender and what your financial goals are is really going to help you in the long run. And lastly is, get a quality agent to take a second look at the insurance policy for you. Ask questions about what you have, your assets, your belongings, your coverage needs are going to be different than your neighbors or your family members or people in your life, typically. And having a second look at it so that, when you pay the premium once a year, you can rest easy knowing that you're properly protected and having the actual coverage that you need. And again, Brian, I really appreciate you having me to be able to talk a little bit more on this stuff. So.
Of course. Now, before we let you go, obviously, people have learned so much from you. They're going to want to talk to you more about it. They're going to want to learn more information. Real quick, give me how do I get in touch with Ari David? Where it's going to pop up on the screen, all of your social media, your phone number. How do we get in touch with you?
The easiest way to get in touch with me, you can call our office anytime. We're located here in Arlington Heights, Illinois. We're also licensed in both in Illinois, Wisconsin, and Texas, hopefully expanding to some other neighboring states in the near future. You can call us 847-305-3434. Call or text. We love when you text us. We'll get back to you as soon as we can. You can always shoot us an email at contact, just the way it sounds, at aridavidinsurance.com. Ari David Insurance is all one word. And of course, catch us up on the web, aridavidinsurance.com. We try to keep it all straight, simple, nothing too fancy there. And we look forward to hearing from you and anything that we can help with. We do our best to just answer the simple questions, and we're also open on Saturdays. So
yeah, that's a seller right there. Open, some people just are closed on Saturdays, right?
Yeah.
So I'm going to make sure to put all that information in the comments down below, ways that you can get in contact with Ari, find him on social media. Remember, you can always reach out to me at yourmortgageguybrian.com. You can give me a call, 847-612-2587. You can email me at bborzak@homeside.com. And follow me on Instagram at yourmgbrian. I want to again thank my guest in the studio today, Ari David from Ari David Insurance. Thanks so much for coming. This has been These Are the People in Your Neighborhood, and we look forward to seeing you on our next episode.
In your neighborhood, in your neighborhood, in your neighborhood, say who.